Hello everyone, welcome to DMVII Live for November 4th, 2017. Keep in mind, stocks and strategies discussed here are for information only. Do not treat any information provided here as investment advice or recommendation. It is up to the individual investor to perform due diligence prior to investing in any company. And here are the symbols covered this week. Feel free to pause the video and look up the symbols to learn more about the underlying businesses.
Banging the clothes.
Banging the clothes, wow.
And
That's a little lewd to me.
okay, well, Hector, you're so far beyond me. I'm too old.
Inappropriate, actually.
But in any case, that's what he did, and they got.
Maybe that's why he got kicked out.
Friendly show, come on.
All right, Marie. So let's kick it off.
You know, I've always had an interest in Qualcom because of their chip making. But recently I noticed that in the Wall Street Journal, actually on Saturday and Sunday, and I didn't really get to read the article, is that Broadcom is trying to do an unsolicited bid to take over Qualcomm. And I just wondered what other people in the group thought of that. Broadcom.
Well, from what I could tell, it sounded like a little move of desperation on Broadcom's part. That's all I was thinking.
And how do you think that would affect the stock, or what do you think with...
Well, I think they were trying to be avoided to pressure being taken on themselves, so they better jump before they get.
It's a defensive move, yeah.
Right.
Offensive.
That's my guess.
Yeah, I mean,
I don't know nothing more about it.
the way that I
Speculation.
remember, it's earlier this year. Of course, we had a lawsuit between Apple and also Qualcomm, essentially trying to stop paying Qualcomm royalty because they think they're overcharging for the service they're providing, the hardware that they're providing.
Qualcomm
And they're
has
also monopolizing the market, just because
3.7 yield, so
pretty much all their technology in the communication realm, they're the leading experts, and therefore they can charge whatever they want, right?
Qualcomm, yeah.
So that's why Apple was like, oh no, you're monopolizing that market, you're overcharging us, therefore we're gonna cease paying your royalty until this lawsuit gets settled. And of course now Qualcomm, they pull back a lot of the software for testing those communication chips. So now Apple unhappy. Of course, to fight back, Apple basically said, in our next iPhone, we're no longer going to use your Qualcomm chips for communication devices.
What are they going to use?
There was another company, I believe, it's OTC, it's a over-the-counter company. I can find that out. But so because of that news, it actually tanked to $50, just like the drop. You see the drop towards the end.
Mm-hmm.
That was after Apple announced that they were going to drop Qualcomm. And then a few days later, of course, Broadcom announced, along with Trump, I believe, that they were going to bring back the business to the U.S., essentially bring back 100 billions of business back to the U.S. And right after that, it announced they're going to acquire Qualcomm. That's what triggered the thing. So I think it's a good acquisition just because they still hold the technology, the patent, all the necessity to be the leading communication chip provider.
Even as high as it is now?
Oh no, I'm talking about the company itself is good. Yeah, but I mean, if they're talking about buying out for 100 billion, right? So right now it's trading market cap at 91. You still got 9 billion left. Maybe there's arbitrage. I don't know if this deal goes through. So that's.
And you would buy which? You're talking about buying Broadcom?
Oh no, I actually got into Qualcomm.
Qualcomm. Buying Qualcomm, yeah.
Qualcomm, they were going to get, I think the bill was 100 billion, so that would be an additional 9 billion.
And whatever happened with the lawsuit with Apple?
It's still ongoing.
It's still ongoing. Those things go on for years.
Yeah.
Apple is making noises about not even dealing with Qualcomm anymore. I think Cook said yesterday at the quarterly report that we don't need Qualcomm.
But only if they can get, I guess, quality chips or something someplace else.
Yeah. They did announce which one, though.
Huh.
No, I mean, also went up on the news, by the way. The acquiring company, here's the chart for that.
Yeah.
5%. Yeah. So they both
went up.
Like they had a kick.
is that it for you, Marie?
That's it. Just wondering. So does everybody think Broadcom and Qualcomm will both go up, or what do you think? Or do you think this bid won't go through, or maybe it'll turn around? It'll probably turn around. Do you think would Qualcomm even want Broadcom? Could it turn around on them?
To be honest, I don't think there's Qualcomm can probably stick around on their own without being bought out.
Yeah.
Because I know people that work there, and they say, oh, they're doing very well. And there's no reason to be called out, especially if you're doing well.
Unless they want to buy the other company out. Sometimes it turns around on them, I think.
Yeah.
Well, that's it for me, yeah.
Yeah, but you can see Broadcom real quick. You can see that uptrend over 5 years. Solid company in the thick of things. I think you're probably going to do well by owning AVGO. Broadcom.
So both of them will do well is everybody's
They're both good
assessment
companies,
here.
yeah.
They're both good companies and both of them will do well. Broadcom and Qualcomm. Good, thank you all.
Okay, Nelson, you're next. You've been gone a while, so we missed you. I missed you. I mean, I don't know about anybody else, but
I wanted to ask if anybody's seen Bo lately, because I haven't been
A
around
couple,
much.
he
3
was
weeks
here like
ago,
a month
you
or
made
so
an
ago
appearance.
for one time.
Yeah, does he look okay? Is he
He
doing
looked
all right?
like he
He
had
looks good, but I think
hair.
he's, you know,
He looked
it's a
good.
challenge.
He had some hair growing, and he
Yeah.
looked like he was sporting a guitar. It was Bob Dylan or something.
I got the impression he's definitely battling for it. So, I mean, he's got the spirit to stick it out, but
Yeah.
I mean, I think it's tough.
But he's still doing the futures, selling calls and puts at the same time for gold and oil.
All right. I could talk a little bit about the status of my portfolio in the market this time of year, but I think I'm just going to pass for now, and if we don't have enough stuff to talk about, you can come back to me.
All right. Rick, you're next.
I had my semi-annual review with my Fidelity representative about the part of my portfolio that Fidelity is managing. They gave me exactly what I asked for. I wanted a really defensive, conservative portfolio, and that's what they did. It was 72% bonds. But I was having some second thoughts that I wanted to talk with my rep about. I'm on track to make about 2% on the portfolio, and I feel like I need to at least try for more than that. That's 2% is less than nothing really when you factor in inflation.
But isn't that what you would expect? I mean, that's what bonds yield these days.
Yes.
It's a couple of percent. You have a portfolio that's mostly bonds, that's what you're going to get.
Yep.
So you're the
So
one
I
who chose
just-
it.
I did choose it, and I changed my mind.
Everybody's got their own way of thinking.
Yeah.
And that's what we want to
But
hear.
what?
Yeah.
Anyway, we agreed to make some changes, and now it's about 50-50 stocks and bonds.
A quick question though. Why do you think bond is the conservative way to go?
But their bond,
You're guaranteed to
funds.
lose purchasing power over time. How do you think that's conservative and safe?
Yeah, at a rate roughly 2% a year.
You're guaranteed to lose your purchasing power.
As rates go
And
up,
that doesn't
you
take
do that.
Well,
taxes
that's-
into account.
that's kind of the conclusion I arrived at. Why I changed my idea of
Yeah,
the
even-
asset allocation. for
Even
this.
50-50 now, it's not a needle mover from 70-30 that you had before.
Well, the only reason I could see for having a fairly large bond allocation is they're probably not going to get whacked anywhere near as much if there is a serious correction.
That's right.
If the interest rate increases, the first one gonna get calamity is bond prices.
Well, not all bonds. It depends if you're treasury or corporates. There's going to be a big difference in those markets. Treasuries are going to rise. Corporates are going to fall.
So that's right. So the new Fed chief coming on is more Janet Yellen, but Trump's person. So the thing about that is that he is going to be dovish to say, try to keep rates low. Now, obviously the global economy is going to determine the pace of interest rates going up, but it looks like the bias is going to be to the downside in terms of keeping rates low. So bonds may not suffer as much as somebody who might want to raise rates a little more aggressively, right? So yeah, you're throwing the dice either way. But
In an
anyway,
economy that's based on credit, it's hard for me to see how they could really go gung-ho on raising rates.
But,
Right.
but wait, did anybody see that? I gave sent out a chart about the total assets out there. I mean, that gives you a picture of what's really out there. I mean, the visual depiction is very impressive.
What of what?
I
What did you
sent that
see?
out yesterday about, the bond, securities are, a huge amount of trillions of it, and derivatives, how what the scale are in is just enormous. Silver was just a little bit down here. And $17 billion or whatnot just hardly even showed up.
Well, for the stock portion, Fidelity now has me mainly in large caps and non-US funds, which I think is a smart way to go.
large caps and non-US.
Well, at the Flight Safety Foundation, an international organization where I used to work, we weren't allowed to say foreign because we had lots of members in other countries, and so now I automatically say non-US. All right, thank you. That's it for me.
All right, Dan, you're next.
I didn't buy or sell anything, but it's an observation. Actually, you had this stock too, OHI,
Yeah.
and that took a hit
Omega
along with
Healthcare.
Tanger. Yeah, but the entertaining observation with OHI was when I looked at it on Yahoo Finance, and then a couple of blogs down, there was a comment by like maybe 3 to 5 days earlier. There was a comment by Brad Thomas, and this was part of his sleep well at night portfolio.
Oh my God. If you don't watch
Gary.
the stocks, you know that.
If you
So
look
anyway.
at everything that Brad Thomas owns, I'm starting to think he just inherently likes real estate. I
Oh, he
mean,
does. He does.
Nobody
That's
just,
his
I mean,
niche.
I'm not
Yeah.
sure that he is really as discriminating as he might be. He's a very smart guy, and I almost always read into it.
I glance
Wow,
at his
he
stuff,
just seems to have the
yeah,
whole field of
yeah, but this was like within a couple of days of the pullback. So anyway, that's it.
All right, that's it for you. Okay, Jay, you're next.
Well, I don't really have anything, but I want to just very briefly channel a former participant here by mentioning a stock called Orbitech.
Oh, yeah.
ORBK.
Oh, yeah.
ORBK had earnings, which were very good, and sucker is now about 50% above what it was originally pitched at here about 6 months ago.
Can I throw another one here?
Sure.
STM. That was pitched to at $14.50. STM.
Oh, yeah.
What did they do, John?
Well, they're sort of in the same field as Orbitech. Orbitech is, according to Josh, the core of this field. But I got into this because of a teaser, and we talked about it, and that gumshoe.com site is a way to find out these teasers, what they actually are. And this Paul Mammothville is, I guess, I don't know if he's a con man or whatever, but everybody
He's
was
been stung before.
Hector can't pull it up.
No, I'm doing a compare, even
Okay,
better.
well,
for you.
anyway.
No, this is even better because comparing STM and RBK.
Yeah, he basically was pushing this to his clients at $6 to $5. That STM, and then if you go on Yahoo Finance, and you see something $19 trillion industry by 2020, that's the STM. That's the teaser for STM.
As STM basically they do semiconductor devices. They fabricate ASIC
I think there are
boards and also
sensors too.
and
Yeah.
a lot of the IC. And the thing that's mostly driving the STM, especially in the ASIC realm, is of course the cryptocurrency. People use ASIC boards to mine cryptos. But for Orbotech, they're in the yield enhancing industry. They essentially do check on the semiconductor post fabrication for the connectivity issues or short or open circuits, and then fix them. So they apply like somewhat different. It's somewhat in a different.
Well, I mean, I
but they
brought
both
that up
deal,
to Josh.
Yeah, they both deal with MEMS technology.
Yeah, so
It's
there's
just a small fraction of
the reason I'm saying is that again, whatever you want to think of Paul Mammothfield, whatever, he told us that sector, MEMS technology, is a $19 trillion sector to get into. And, you know, I don't know, Gary and I got into another company, I can't think of the name of it, I got out of it. It was in MEMS technology. So, and I came in here with a list for you all about MEMS technology, and I think I drove you all crazy about MEMS technology. But, you know, the point to what Jay was talking about, this Orbotech move, because when I brought it up, Josh said, well, this is what they do. They are MEMS. They are MEMS technology, Orbotech. So,
Can you put AMAT?
is that another MEMS?
That's my
Yeah, AMAT is closer to Orbotech.
AMAT is
to,
my big jump
STM.
for semiconductor.
So I don't know if you
It's
like
getting
the
closer.
comparisons, but here's a yellow, here's AMAT.
Yeah.
Over the last 6 months, year to date would be like this. I don't know if you can see that. But STM is leading the charge, and then AMAT, and then Orbotech from year to
I mean, it's
date.
just, the other thing about, I'll say STM, it had a dividend, and it's been around a long time, too. So, I mean,
Good call, John.
well, unfortunately, John doesn't stay with things. He gets scared, and I got out when it came down, but I did get back in at 19, but I kicked myself in the head because I had large position at 15, and I wish I had held it, but I didn't, so.
Yeah.
All right, I will give a pitch on that Josh Hoomey's thinking is that you really know something really deeply, you're not going to be kicked out on something like that. But when you're more casual and all that, you're more vulnerable to that. You don't really know. I mean, that's just, you know, want to throw that concept out. You know, that if you really know something, then you're more confident in your thing.
Yeah, like Gobi's same philosophy. It's a good business. Why sell it?
We're back to you, Jay. Is that it for you, Jay? All right, Gobi, you're next.
Yeah, I hear this, like, you know, the markets are up or all-time high and there are much opportunities out there. But, I don't know, maybe I'm looking into different areas. I find opportunities like left and right, like everywhere. But what you have to do is like, you know, willing to look after that 500 companies in the S&P 500 or 30 companies in the Dow 30 to see opportunities because those are not represented in the indices market. One is like an obvious one that like everybody knows about it. Comcast. Comcast has 3 distinct businesses that they're jumbled into one business.
What is that?
CMST, I think.
What?
CMCSA.
Yeah, CMCSA.
CMCSA.
So they have this CNBC, NBC business, the broadcasting side, and then they have this cable, like a TV bundle that you get, and then they have this broadband. So last 10 years, the 2 segments revenue as a percentage of their sales and earnings have gone down, the broadcasting and the cable side. And the broadband internet side has been like getting bigger and bigger and bigger.
Is that a retail business?
Comcast?
I'm not sure what you, no, the a broadband part of it. Is that retail? Or they sell that as broadband to companies or?
They do both of that. They sell it to the business customers as well as the residential customer. Residential customers, you know, probably some of us here are customers. Xfinity is called.
Most people here have it.
It used to be called Comcast,
Yeah.
but Comcast name has a bad reputation, so they changed the product name. Xfinity, maybe like 6-7 years
So
ago.
rebranding.
Yeah.
So interesting thing is they are the largest broadband internet company by cable in America today, period. They have like 27 million customers today, and the broadband side has like 90% margin compared to the other area, broadcasting and the TV subscription business has like 40% margin. But a lot of people are worried about the cord cutting, which is real. You can see that attrition is coming up. But one side is they're not focusing on, which is the important side. Very high margin, very reliable business, internet. How many people can live without cable internet at your home? I'm not talking about wireless, I'm just talking about broadband internet.
Well, Verizon and also AT&T are in that business, right?
Verizon is a very small part, but the bigger players are Comcast, number one. The number two company is Charter. They control Charter and Time Warner Cable and Bright House Networks. How many people are going to give up your internet connection if they increase the prices 5% or 10% next year?
Yeah,
Well,
probably nobody.
Do that by default. They just jack your bill up unless you complain.
Yeah.
I gotta say, I looked at Comcast
So-
a lot, and the reason I didn't buy it is because I just viscerally hate them. Every experience I've had with Comcast has been extremely unpleasant.
Yeah,
And for business, you have to pay them. They sell regular Comcast, and there's another tier, which is Comcast that works, which just drives me up the wall, but it may be a very good business.
but often there's no alternative.
True? No, it's...
So the important thing here, alluded to that, the competitive advantage. You don't have an opportunity. It's like a utility company. If you live in like in this area,
Yeah,
Dominion is the only guy.
unregulated utility.
And unregulated because there is nobody says this is the amount you can earn on the return on capital on a capital that you commit. Maybe at some point it will get regulated. We don't know, but they can argue that we're giving more and more for your more and more money. It used to be like 10 Mbps. Now it's 50 Mbps is the norm. Maybe 1 Gbps will be the norm, 5-10 years from now. What I see is incredible business, customer, whether they like it or not, they need it. And they have incredible pricing power. And they have an incredible manager, Brian Roberts. His father is actually the founder of the company. So he's the son of the founder. And they are one of the least leveraged in terms of the communication
Can I
companies.
ask you, what's the catalyst that's going to get this from the doldrums? You see a downtrend here. What the catalyst is going to turn it around, right?
Let me talk about the doldrum first, and then we'll see if there is a catalyst or not. The doldrum is basically the cable cord cutting effect. Basically, the TV, they're losing the subscribers. They're not alone in this. Charter does that. Dish TV, Direct TV, everybody loses that TV subscribers because people are not watching TV as much as they used to. Now they have other alternatives like Netflix and Hulu and other things.
Yeah, but now also we have over-the-top services which come in through broadband.
So interesting thing is, yes, they lose the subscriber side, but the other side is all these contents are still consumed on the broadband internet that they're providing it to you. So people are not looking at that correctly. They are correct in thinking that subscribers are losing, but if you look at the sales number, it's always one side up because consumers are more and more reliant on the internet, which they are part of. And cash flow and operating margins are unbelievably high, and they'll get noticed over time. If the stock is down, they'll buy back a lot of stock, they'll give dividends and all of that. And over time,
I fully agree with you because I've been hurting with, I brought this before the crowd here, AT&T, same thing.
AT&T, Comcast are completely different business.
Well, how would you say that?
Because
they have
they're
UVerse, obviously AT&T has the same internet.
substitute.
Pardon?
There's a substitute. You don't have to be tied up with the AT&T. You have no attachment to it. You can change your AT&T to Verizon or T-Mobile as
But let me ask you this, Comcast by law has to compete with a secondary competitor in every area, right? So you can just as well get out of Xfinity and go to AT&T in Michigan and everywhere else, right? So what's the difference there?
Well, not
There
for
are very
broadband.
few areas. There are most
You can't have a
areas.
monopoly, right, by law.
Most areas,
Yeah.
there are only one competition. It's like a duopoly. Like
Yeah,
in more
yeah.
areas, there are oligopoly. They are
Exactly
one of
right.
the player.
Is that
But
correct?
you can argue that there's only 4 big players in the telecom. But where they differ is the pricing power, where the competition is irrational. They're cutting the prices to obtain customer, which is not the case in the cable broadband side compared to the wireless side.
Well, yeah, that's because AT&T not only has the broadband, but the wireless side as well. That's another
Wireless side is the bigger side, and the wire side is the old phone, cable phone, which is like a dying business to a large extent. So they do have the asset. They can claim that they are a wire business also, but their revenues and cash flows are not even close.
Right, so yeah, you're right. So there's a narrative out there that's overplaying the cord cutting story and not seeing the revenue stream that continues out there.
The cash flow, 60% of the cash flow is coming from this broadband business, and it will increase both on the absolute terms as well as the percentage basis over time. So market is like misjudging it by a large margin in this case. But we will see.
Longer term, though, I wouldn't say this is a slam dunk because you have 5G coming in a year or two, and then you have Google Fiber. These are
Google Fiber actually shut it down, but go on.
I would just say that Google Fiber is not down completely out. I'd say they'd come back, considering to his point that Comcast is so hated, people will jump to anything. I would love to get rid of it, but the only opportunity for me is Verizon, which I hate a little bit more.
Yeah, I do too.
They're
So
experiencing unusually heavy call volume.
Yeah.
And they have been for 23 years.
Yeah. Verizon?
Yeah. I read an article about that. That recording has been going on for like 23 years. Every call is
By default.
Yes.
Yeah. So I just say that long term, this is not a slam dunk, but for the short term, people have to use this for the broadband to cut the cable. I get that.
You can argue long term, almost everything is dead, including us. You can't.
Nobody gets out of this left line.
You can't see that. You always can come up with reason why this is not the case. There's always something looming and uncertainty you can talk about. But as an investor today, you have to invest in something that you're most comfortable, confident in, not thinking about what potentially something might happen. It may not be the
So
case.
you're looking for a next quarter report, which will be a surprise. That'll be a catalyst to get the stock up, I suppose.
Sure, on a short-term basis, yes. I'm much more interested in being a business owner. On a longer-term basis, they are a viable player. Even with the 5G introduction, everybody is talking about that being the biggest risk, or potentially. I don't see how that's going to be because we still don't know what 5G can offer, and we still don't know what the price they can offer it at. But we do know it's going to take billions and billions of dollars to put it out in terms of network. Right. And they can do that. Comcast and Charter are actually already doing that wireless service provided to their customers in selected areas. Basically what they use is they lease the towers and they'll use their fiber optics networks using small cell technology to provide the service. So this is a much smaller business, maybe like 200,000 customers they have, Comcast, relative to the 26 million customers that they have in broadband.
Yeah, the T and Comcast together, they kind of react to the same story.
But they're absolutely wrong. They're not even in the same business. The customer base is different.
Some of it
the cash flow characteristics are different.
I don't understand what you're saying. I didn't think that Comcast was in the wireless business.
They just started maybe like a few quarters ago.
They are with 5G.
They're piggybacking on Verizon's network.
So they started, right now you can go read about it.
That's a winner.
Yeah.
Verizon quality and Comcast customer care.
There you go.
That's my new ETF.
Yeah. Two hater there.
As an investor, you need to be careful about not overriding your emotional, personal experience relative to what the reality is. Yeah, you may like or hate about some company. Let's say you love Cozy. That doesn't make it as a good business. That business went bankrupt. It doesn't make it a good business or a bad business just because you like it or you don't like it.
That's true, but I think it's a good place to start, despite that.
That's a one way, but that's not the only
But
way.
to be fair, customer sentiment, if every single person you meet hates a company, I would think about that a little bit.
Yeah.
Sure, but you should also
If they
think
weren't
about
a
whether
monopoly,
that
they'd be dead.
you should also think about whether that gets translated into earnings and cash flows and sales and stuff like that. That's the emotional part, I understand that, but you need to be agreed with the reality what's going on. Like, are they cutting the service? They can go and buy Cox if they want. Like, as you said, and there's almost every place they have an alternative provider.
CMCSK. Hey Gary,
Yeah, this,
if you look at earnings, last year the earnings of Comcast was $3.48 a share. This year it's projected it's going to go to $2.07 a share, which is a big drop. Next year, $2.23 a share, up a teeny little tick. It's earnings that cause the stock to move. If you look at that chart, it's in a downtrend, which is reflecting the fact that earnings are generally in a downtrend.
Flat.
And you gotta look at earnings and projected earnings.
Well, Vince, I'll say something. I'm gonna ask Gobi this question. I would say 7 out of 10 companies that I see, they report earnings and they do well, and guess what happens to the stock? 7 out of 10, they go down.
Because they were looking at the projected earnings.
7 out of 10 go down, and I'm like, it's doing great, and it goes down.
Well, John, I think
I mean,
part of
is
that
that
would
why
be
they're-
that they
they're
expect
up?
just before the earnings, the stock drives
Yeah.
up,
So
and they sell on the news.
It's,
That might
So
be
the
some of
the stocks that they go down, they're over optimistic before they report the earnings. The stock price already up. So unless they report a banged up quarter or forward earnings are going to be like really, really great, usually the tendency is people give up and they're going to sell. Usually these people like bought in like a little bit earlier, so they're fine giving up and
Yeah,
And some people are really panicking. They don't know what the hell they're doing. They need to sell because the prices are down. Nothing to do with the business at all.
Mhm.
But there are a few reasons like that.
Yeah, but it's not future earnings that, because
Yeah,
what they.
it plays a role.
Future earnings
Okay.
plays a role,
Yeah, okay,
but it's really hard to say
okay,
how much of that plays into it,
right.
especially relative to within a few days, right?
Yeah.
How many people really trading those stocks? How much is the volume? So many other things gets into play.
Right.
But the question about the earnings versus cash flows,
Yes.
those are
Thank you.
completely different. And you need to
Or
learn
can
about
be.
accounting if you need to know about that.
So
So
that's
the-
what I would say in response to you, Vince, about the earnings, is that you really have to look at cash flow and not earnings. Because a big company like this that invests a lot of money every single year has a very complicated balance sheet.
So they get depreciated
And
a
net
lot.
earnings, after all the things that they do inside there,
Look-
is
look
not
at
a
what
good
the price- Look at what the
description.
price of the stock has been doing.
It's still not a good,
It's an
their
anticipation-
listed earnings are
the
not a good
anticipation of
description.
future earnings.
Yeah,
And
and
the anticipation of future earnings is like that, I don't buy the stock.
yes, I understand, but I think it can be a mistake because you're not looking at cash flow, which I think is far more important.
Okay, what do you know about cash flow?
Well, it takes in all these special things.
I think
If
for that
they're
particular
if they're
company, you
writing,
know what
I
the
know
cash
nothing
flow
about
is.
it. All I know is
Oh,
that it's a
this-
big
I can-
company
I can
with a
specifically-
lot of
Would you buy,
write-offs.
would you buy the stock if
Yes,
you know
he does.
nothing about cash flow?
The fact that the price is
I do.
falling is attractive to me, not a
So
negative.
cash flows, if you look at the year over year, it's always up. But the depreciation and amortization, how they spend the capital today, that's going to drive the income statement. So depreciation and amortization is not a real expense today, but it's a projected expense. But they get to deduct on the interest, like interest expense and expenses side, which decreases the net income, not necessarily the cash flow. But cash flows are the one you're going to be able to live with, not net income accounting. To give you a simple idea, net income is an accounting metric. Cash flow is a real cash flow coming into the business or going out of the business.
So another way to think about it is that, I have a business and I have $100 in cash flow, and I'm spending $90 of that to build infrastructure, right? And I only get $1 in net return essentially for this year. Next year, if I don't spend as much and I got the capital expenditure dropped down to 50, and now I have all the infrastructure I built up previous quarter, so I make another 100 on top of the money made on top of that infrastructure, and then I only expend 50. Now I have additional $50 in my balance sheet, which the whole business didn't really change at all from the first quarter to second quarter, but I look like I have 50 times earning.
But the difference is when they spend it, the year they spend it, it will cost the
Earnings
net
go down.
income or
Yeah.
earnings to suffer a lot more than what it's supposed to in the reality.
So, excuse me, my example for this would be real estate companies, which typically report no earnings.
Yeah.
They'll have 1 cent positive or 1
Especially
cent negative,
especially the
and that's
ones-
all because of depreciation that they take on their real estate. Is depreciation a real cost to them? No, it's not. It's just a bookkeeping number, which allows them not to pay taxes. So of course they're going to take it. You should never look at net earnings for a real estate company. So every company is different, and you have to look at every single company to try to figure out what's going on with their earnings statement. Because some companies are seriously affected by this, and some companies are not at all affected by this.
I just figured out a way to summarize this. I will make it quick because I'm the accountant. DCF cash flows, discounted cash flow metric is based upon a 12-year model. So if you're going to use DCF as a means to invest your free cash flow over a 12-year period, you can do an initial investment and project that in a pro forma statement. So that's what most people do when they're investing in companies that have high free cash flow. They'll look at the pro forma statement. The pro forma shows an increase. They look at it as a cash return investment, not as an investment in the actual stock. Gold is kind of hidden. That's a high level investment strategy. And that's how I like to summarize it.
Yeah, I would agree
Maybe
with
we
that.
can
actually,
talk
yes.
about accounting if you want. That's not going to be much.
So
a lot of people's
so
interest.
do I buy the stock or not?
I mean, it spelled it out. It makes sense.
Oh, by the way, I do teach to business students once a semester in GW. Actually, this week I
I'll
taught.
give you a plug.
I taught a business class. Way was actually there.
So what's your
I enjoyed
course?
it.
Say again?
What's your course? I can write.
Oh no, this is a guest lecture. Like there's a business.
Oh, okay,
This is
so
like for master MBA students in GW, and a few guest lecture come in every semester to teach on business investments and valuations. And similarly, this is the type of stuff that we talk about, and students can ask any questions that they have in their mind. And Wei was one of the attendants this time. And yeah, I've done presentations before here, a couple of years ago. And
The next time I send it out early and I'll send it to everybody.
yeah, this time it was it was a short call. I was supposed to do the guest lecture on December, and it just got preponed because they had something else coming on in December, so they preponed me, which didn't give us a lot of time to notify everybody. Otherwise, I would have let everybody.
That's good. You were able to prepare a good presentation at short notice. So
Well, it's more about what kind of companies and businesses that we're thinking about, and why we're thinking about it, and how we can protect ourselves if the business doesn't materialize the way we think or hope it's going to over time. And it just gives me a great incentive to coherently think through my ideas and put it in my brain to a large extent, so that it's easy to explain to somebody who like to learn that kind of stuff. I'll let you know the next semester whenever I teach. If you're interested and have time, and you can check it out.
Before we let his brain go, though, AutoNation.
Yes.
Tell him.
Well, I don't want to brag about the things, but
Well, tell him. You told him, went up 5%, right? this year?
it's not the 5% that I'm interested in. I'm interested in business is going to be sustainable over a long period of time. And people argue that Ford is going out of business, GM is going out of business, and all of that. It's so irrelevant. This is a dealership business, basically. They make money not by selling cars. They're selling warranties and parts and services, period. If you understood that economics, it's a good business. If you don't understand, if you don't think that's a viable strategy, it's a bad business for you. And if the business does continue to do the same thing, last year alone, they bought back 10% of the stock, which means if you owned 1% of the company, now you own 1.1% of the company, to give you an example, without putting a dime of your own money back.
Real quick, how does that translate to replacing cars from the hurricanes and for Ford and GM as a short-term trade?
I don't care really about short-term trade. I'm not
I
interested.
withdraw the question.
What caused the gap or the jump there?
Well, they announced the earnings, and the earnings were higher because they bought back 10% of the stock, and that alone increased the earnings. And also in general, they're going to have like a favorable time because a lot of cars have got destroyed or they need like product life cycles. And also the stock was really down as we were talking last time, and because people were so pessimistic about the dealership distributor model, and Tesla's going to come around and they sell it directly instead of going through a distributor model. But it may make some dent in overall percentage, but still a lot of people want to go back to dealership one way or another to buy cars, especially the old cars. They don't want to deal with me selling the car to you, my old car. You feel comfortable, I know we hate dealership, they're gonna mark up the price and all of that, but we don't have better alternative. And especially when you buy a car, a newer car, 3-year warranty and services attached with it, so they make a lot of money on that rather than just selling the car. Selling the car is just like a razor blade model. They're just selling you a razor and then you keep coming back for the blade. That sort of thing. And actually they have a lot more margin on used car than an unused car, like a new car. They have higher margin on the parts and services by far, something like 90%. But that's just the gist of that. Automation was one of the companies that I
Well, you spoke about it and it went up, I saw. I just figured you weren't talking.
But yeah, the stock price goes up and down within a short-term move, people's psychology and how they perceive the future. But over time, the business sustains, the earnings are higher, cash flows are higher, and as an owner, you would be a beneficiary of that naturally.
Because on a long-term basis, John, you see here, it really comes back to this particular price, as Gobi just said, you're really a little bit above what you were.
Well, I think he was recommending at 40 something.
Right.
He came in and talked to us about it.
So is that it for you, Gobi?
Thank you.
No, you're next.
Okay. I'd like to admit defeat first, ladies and gentlemen. STT. And I know this is going to be a bad thing for me to say, but I'll say it. STT was a stock, but we talked about the State Street Corp.
Yeah. A 1.8% yield.
Yeah.
And
The company that I recommended because I met the CEO or know the CEO. I bumped into him downtown DC and sold a good pitch. But as you can see, since last week, we had a pretty significant drop in the stock, which caused me to trade out of it.
oh, okay.
We call it a tax loss.
Yeah.
So tax deduction.
Something like that.
To make up for your Bitcoin.
Yeah.
No.
So I start thinking about when I say to myself, I liked the guy last week. Now I'm thinking of reasons why I didn't like the guy. So that's the whole thing about investing. So yeah, he looked kind of shady. I should have known.
It's okay. We can learn from.
That's what we want.
From
We
you.
don't want to know what you think. That's,
Yeah. So if I recommended this to people, I say it's a great entry point. If you didn't look at it before, you can look at some of the fundamentals as an entry point. At this particular strike price, that's more than welcome. As for myself, because I bought so high, I had to liquidate. So, fortunately, it's a sort of a loss for me. But I do want to mention it for people that I told last week. We were looking at the stock. This would be a good time to buy and feel the companies. It's going to continue to perform.
Yeah, but the other one you pitched last week did the opposite. ANSS you pitched last week.
Okay.
ANSS.
Oh, yes.
Just give 5 days. Just give us 5 days.
Yeah. This is
I never heard of this.
So no, don't beat yourself up. You had a winner and you had a loser.
Boy, thank you.
I mean,
Oh, yeah, it's what happened there on Thursday.
Yeah.
A big gap like that.
This is earnings.
Oh, earnings. Okay.
Well, Jay won't tell you, but we're kindred in the stock because I assume he's been in it for quite a long time. I've joined the club.
17 years.
17 years. I've joined the J Club. I'm enjoying the ride. So, if you guys want to jump on board, Jay's club is pretty nice. VIP. So yeah, this is a great recommendation. But Jay, ESEC. You remember that stock?
Oh, that's.
No, that's.
No, I just
can
don't know.
assure you that's
ABC.
Okay, all
That's one
right.
of the worst ABCs out there.
I did purchase some, but I got an entry point. I think this is a great time to buy. If you, I mean, I'm not a
like criminals that were partners.
I mean, they do have a reputation to defend, though.
I mean, what do you guys think of the stock? I'm not really recommending this one.
12% dividend is what
Get out
I'm
of
thinking.
it.
Yeah.
Wow.
From what I remember, I believe that they have very dishonest management.
Their management is
Gotta
well
be right.
compensated. You can count on that.
Jail.
Anything more is uncertain, but there certainly will be management.
Yeah, so I mean, I think that the stock has been beat up pretty well. But if you look at the bar, there's actually, if you on if your candlestick, you have a long green candlestick headed up, and I think that if it's been beat up, it's at $5 a share. The yield's good. Short-term
Yeah,
trade,
huge
maybe.
yield.
Well, they keep cutting. They've been cutting that.
And yeah, I think it was hurting the management compensation, so they had to.
He's
cut
looking at the
dividend.
candlestick there, this candlestick.
Until they have a mandate.
1.7 yield, yeah.
Yeah, so like you see that big candlestick there at the drop, sort of consolidating, so it could be.
That's real positive right there.
But this is a penny stock, so I would.
Large volume on that.
So I have one more viable recommendation other than this one. This company deals with. I've brought it up before, but I do want to emphasize that this is a great company to invest in. It deals with HIV vaccinations and also some other core vaccinations. And this one is called ABVV. Yeah. So you guys probably know they deal with blood cancer, they deal with hepatitis C, HIV, and as a company, you know, they manufacture all these pharmaceutical products.
They split off from Abbott about 4 years ago or 3 years ago.
Yeah.
You still have that one done?
So their big product is Humira, which is more than 60% of their earnings. So buying this company, people have looked at it as a bet on whether or not Humira competition will get worse or not. Now it's going up because people have just begun to realize that they have some other products in their pipeline, which might actually be pretty good. And they won a patent suit as well recently, which I think accounts for the rise. I forget what that was about.
I have an instinct of getting into sustainable pharmaceuticals like this because of the bull market. I don't know why I've been attracted to healthcare recently. I've always been tech heavy, but since tech is so high, you know, pharmaceutical or anything in health is where I've been kind of focusing, shifting some of my earnings and profits out of tech into health. So I'm just letting you guys know that this is one of my strategies. I don't know if I'm going to be successful at this, but so far the shift has been I've done really well. So if I was going to give you one more of my recent purchases, okay, that would be my last stock. This one is TMO, and this deals more with
Life sciences.
Yeah, life sciences. Yeah, correct.
Yeah.
The idea is going into healthcare, going at a higher strike price, putting more money into one stock.
0.3% yield, so that's pretty modest yield.
Because I don't have a lot of healthcare, but if I'm going to go big, I'm going to go big. That's my way of diversifying, because I'm too heavy in tech right now. So this is a good strike price for me to dump a stack of cash, and I've been getting a great return.
Do you watch like Merck or Bosco, Smith Klein? If you're going into healthcare, they had a pullback, both of them. The Merck guys, I think they're both good companies.
Yeah, Merck is good. I'll look into the cash flow. So, but this is actually a buy and get a great cash flow, great earnings, and that's it.
All right.
So real quick, I'm going to good name Nazar. I was big on biotech back early spring, and you can see that there was a big run up when he got in. But lately, this is the XLV ETF for healthcare in general. But now it's kind of, like Noel said, it's kind of down dip in there, which might be a buying opportunity to pick up on healthcare. This is the ETF that carries a lot of healthcare.
Right, but these are all the big pharma stuff.
Right.
Pharma
Yeah,
stocks.
Also XBI.
Pfizer, Johnson & Johnson, that sort of thing.
Right, right. And this is the biotech ETF. Also, you might find the same pattern there. There was a slight dip there. But,
John, you're next.
Okay, I mentioned STM to you guys, but I was thinking about, I've been investing, I guess, over 30 some years in just different ideas and concepts. And unfortunately, I've never had the guts to do what this fella told me to do back in 93, 94. And he said, if you want to make money in the stock market, if you really want to make money, you have to concentrate, sort of like what Josh did. And you have to believe in a company, and you got to go in there, baby. You got to go in there with thousands of shares. That's how you make money. Unfortunately, I've been diversified and 100 here, 100 there. So if you have the guts to do that, if there is a company that you, like his Orbitect or Bitcoin when Noel was buying it at $100, you do that, or say it's Tesla back there. If you do have the fortitude and believe in something, in a company, that's my advice, is to buy thousands of shares of something you believe in, and that's how you really truly make money.
John, what's the rationale for that?
Enron.
Seriously,
you could have done that with Enron, and up to the very last second, the Wall Street Journal, New York Times,
you would have looked like a genius.
Still touting at their Enron.
Yeah, but I know too many.
So there's an argument not
I know.
diversify.
Well, I've diversified. I did diversify.
Yeah, I'm with you.
But I wish I'd done what this kid told me.
So that's the thing. If you put more money on the line,
one every generation,
you will want to study it more.
Yeah, but
right?
pick
So
the
you basically have more skin in the
game.
The point. Okay, so
I don't see why that's inherently an advantage.
Well,
not in one, but you over your lifetime you will see multiple good companies, right? Like you find them, you put money in there. You find the next one, you put money in there. You find the next one. So over time you will be diversified across maybe 10 good companies, 20 good companies, but not just like across the board or some random companies that you buy in and get out.
I think that's the way Warren Buffett played. They did that okay. Yeah,
but this brings me to a point. I talk about General Electric now.
Yeah.
By the way, before we do, I want to bring one point. They said statistically, the academia has said this does work. You really make a lot of money. That's what you do. What you do is you borrow on margin in the whole mix of stuff. Never more than 28%. I mean, because the danger is you get wiped out. But the big advantage on that, making sure you get a lot of money, is that your borrowing rate is always so low for the short-term interest rates. Your rates are low. But what you cannot do is take a risk of being blown out at the bottom, and that's your danger. But that's where you're really gambling. You're saying you really want to get more money. That's what you do. You borrow, a mix of things on a margin, but then you never ever move above that risk, which was thought to be 28%. But that certainly has worked in the past. Now, whether that will work in the future with things being so high now, that I don't know.
Okay, you talk about things being really high. Okay, well, this morning I caught Bloomberg, and they had the CEO of Microsoft. And I can still remember sitting in this room 7-8 years ago, and we were lambasting Steve Ballmer. And Microsoft was a $20 stock to a $22 stock.
Everybody hated it.
And Ballmer was, in fact, a terrible manager.
And now Microsoft is maybe $4. Since the new CEO took over, in 3 years, the stock has gone up 134%. That's what they said this morning on the show. Now, we have General Electric. Now, I looked at Vince's strategy. Do the 535 people that control our country, are they affected by General Electric? Well, I only could find 12 states that they're in, so I don't know if it's quite a Boeing, where Boeing is going to always be protected because 535 people are going to always protect Boeing. So General Electric's in 124 to 137 countries. General Electric has a lot of money. General Electric is not going to go away. General Electric needs to get a new CEO. General Electric needs to sell off a great deal. My point is, Noel would say, gentlemen and ladies, I would look at this very seriously, because I would think in a decade that company will be a different company, and it will be up there with Microsoft is today.
So you put in a buy order at 20, right?
Pretty beefy yield there.
I'm going to get in a drip, and I'm going to tip into it below 20, and I have it. I have it in direct reinvestment for several years, so I don't mind what the price of that stock as long as it's paying a dividend. I'm buying more shares.
Right, 4.77.
But to me, this is a point where I think you have a great opportunity to buy a lot of shares of a good company, very, very much out of favor, very much probably mismanaged for 15 years.
So they do have a new CEO, right, John? And I think
they have a new one, but I don't know if it'll work out because he's from there.
Oh.
But that is a large. It's not Enron. Okay, it's not Enron. It's not Xerox. They are not going to go away. They might not be called General Electric. They might break up into 3 different companies. And if you remember the talk about Microsoft, and I knew somebody that worked for Microsoft, and this is back in 2000, he said, we need to break our company up. And one portion of our company, that's Microsoft, will go through the moon. They never broke it up, but what they did was they got the guy who was in one of the better parts of that company and made him the CEO, and he's involved in the cloud. So the point being is I think people should really look at General Electric, and I would buy a lot of shares of General Electric, and I would make a very strong part of my portfolio. Not today, not tomorrow, because it's not going to go anywhere for quite a while. It probably this next CEO will fail. So we're talking 3 years. But I would keep an eye on this, and I would buy shares. I would tell you to dollar cost average. I am dollar cost averaging, I guess, with the drip. But I plan to buy more shares if it goes below 20. I think when the market crashed in 2008, it was $10, and that's when Buffett stepped in. So it could go down to $10.
I think to keep an eye on the price of the shares would be that juicy dividend of 4.77. The narrative has been that they said that they will not touch the dividend as of 3 months ago. Then they changed the language to say it's a priority. So
most people believe that GE is in fact going to cut their dividend within the next 6 months.
Yeah, and you know, when it was a $10 stock, it was paying a 50-cent dividend. It went down, and but again, it's a matter they're going to have to get another CEO. As I said, unfortunately, I think the guy coming in will fail, but they're going to get to a breaking point where the board is going to say, "Gosh, we got to reinvent ourselves," and that's what happened to Microsoft. And if you go back in time too, that's what happened to IBM. IBM was stuck at like $45, I think, in 2000 or 99. And it just sat there, and then they reinvented themselves, and it sits around like 130 to 160.
Yeah.
Okay, that's my spiel.
All right, Mike, you're next.
Well, I Googled America's most hated company. According to Yahoo Finance, we have Comcast at number 1.
Oh, okay, well, there you go.
And the point I would make there, if there were any sort of an option, everybody I know would move off of Comcast. But enough said.
No, not enough said. I have a short story about Comcast, which I have to tell. I have a vacation house out by Winchester, and the previous owners had cable in the house. So we get into the house, I call Comcast, and I say, hook me up. And 2 weeks later, they call back, and they say, your house does not exist.
Oh,
it's a lot of too much power for one person.
And I say, what are you talking about? You used to have service at this house. They say, well, we found a record of that, but we also found that your house actually literally does not exist on our service platform. So we cannot provide you with service. It took 6 months to straighten this out, and they finally did it by putting a fake address on my house so they could give me service.
That's a software glitch.
Talk about a company that doesn't know what they're doing.
There's a pitch for investment. Okay, well, Noel, I bought a little Ethereum after doing a lot of reading, because it looks to me like the ecosystem is far more mature and useful than Bitcoin. And I'd love to get your feedback on it. Bitcoin is going up because it's going up. Ethereum, if you look at the blockchain technology, I can see 1 million applications for that. You know, and I dug into it. I was going to try a little hack.
Do they actually own the technology, though? Who owns blockchain?
Well, that's open source. What's the guy's name with Ethereum? Bitcoin something or other.
So they're a user, but not an owner.
I'm not an expert, but I can certainly see where blockchain voting for one. I can think of 1 million different things you could do with blockchain technology. And Bitcoin doesn't have an ecosystem around it. It's just Bitcoin. And again, it's like tulip bulbs. It's valuable because it's valuable. Ethereum, I can see a lot more use for it. And interestingly enough, I was thinking about building a mining rig. Not that I'm going to make any money. I'm just interested. And I used to be a hardware guy, and one of my areas of expertise some years ago was high-end graphics stations, so I understand how that works, GPUs, so on and so forth. So I bought it at 308, it's down to 299 doubles.
And I'll tell you, if you go in the Bloomberg West, I think it was in June, Google that, they had the Coinbase guy in for security, and they had another guy that's big in the blockchain, and I think I mentioned this to you before. Ethereum is more organic, and they think it's 10 times better than Bitcoin.
I agree, and I haven't.
Now, I don't know, that's their,
From the tech side, I can see a use for Ethereum. I don't see much use for Bitcoin, but feel free to jump in. And anything you have to say, I'd love to hear it, because I'm looking at it from a technical angle, not so much an investment angle. So I got my Coinbase wallet.
So I have a question about this. How mechanically, how did you buy a share of this company?
I had.
Or how do you do it?
I had a Coinbase account because I had gone back and forth on Bitcoin.
www.coinbase.com.
Here's another tragic story, not more tragic than your Comcast. At one point, way back, I actually mined about 4 Bitcoin. And I no longer can get to that wallet for many reasons. So there's $28,000 worth of orphan Bitcoin.
God, zombie coins.
Yeah, I guess they're zombie coins.
That'd be worth paying a few $1,000s to get somebody to.
No, I have an expertise in that as well. In fact, I just hacked a laptop of my brother-in-law. So machine I gave to my mother, and it's had many iterations, and it's just not there. Because believe me, I made every effort.
Go out to the dump, if they put it in the dump, then.
But I can't get back into that. So there's a lesson there. So anyway, I'm into Ethereum. I picked up a little more Costco and it dipped, which I'm really happy about. I like Costco, and it had a little stumble, and I moved a week about, I don't know, maybe
Costco shall not be Amazon.
Well, they're just completely different beasts, I think. Yeah, I bought, somewhere, around that, and it's up some.
Yeah, you did present it to us last time.
Yeah, that's mine. And I moved on that. I think I've already talked about Fastenal, I like that. Picked up a little more Microsoft, Union Pacific, and that's pretty much it. I'm finding, it's hard to find things I'm really anxious to buy, and I'm a blue chip dividend kind of guy, mostly. I'm an idiot. I actually sold my CNI because I got tired of paying that foreign tax every quarter. It really annoyed me. So I thought, well, I'll sell that and I'll buy another railroad. But I wish I just kept it or paid the tax and shut up. And you can, I think, finally get that back, but it's a hassle. No, CNI is good. Yeah, Union Pacific.
It's Kansas City Union.
Kansas City, yeah, that's another one.
Is one. You see the red performance seems to be a little bit better.
Yeah, it's a smaller.
Pushed by this guy Josh Brown, who wants CNBC.
Yeah, I like railroad. If CNI dipped, I would take my lumps and probably get back into it.
How about CSX?
I don't know what it, and again, there's something about CSX I've never just been able to connect with. I don't know why. I looked at it when I was doing a railroad phase, and the story for me wasn't as compelling, but
Wow. CSX seems to go much better.
yeah.
Well, except for the last 6 months.
Well, CNX for a long time was one of the worst railroads
They
It
got
was
better.
with the
poorly run,
worst
and they-
management.
And
And
they
then
couldn't
maybe
integrate their
5 years ago or something like that, I don't know exactly, the management must have changed because it became a much better company. And I know that their operating ratio, their efficiency ratio, has gone down like crazy, which is good. So it's become a different company
Yeah.
from what it was.
Yeah.
Yeah, I didn't re-investigate that when I was looking at railroads. I think for the last time I looked at it, this was very.
Right. But your basic dislike of the company was
Well,
well founded.
You know, it probably was 5 years ago because they just really, again, the gang that couldn't shoot straight.
Yeah.
And I didn't re-look at that. So, you know, that was but that's all I'm using.
All right, Vince, you're next.
I'm looking at the analyst recommendations for General Electric, and I'll read off some of them. Argus says buy, Bernstein outperform, Credit Suisse, which is a big brokerage house, outperform. Citigroup says buy. Let me see. Merrill Lynch says buy. Morgan Stanley says underperform. And it has a couple of sells. Oppenheimer, which is a big brokerage, says underperform. Is an outperform. A neutral is an outperform, and so on and so on. And so it depends on. It almost depends on your bias, whether you buy the stock. Being that I'm an old man, I might want to look 2 or 3 years ahead, but not 10 years ahead. And if you buy the stock, and this is true of a lot of stocks, it's a question of do you want to be analytical about it, or do you want to do it on gut feel? And if you're doing it on gut feel, you're not an investor, you're a gambler.
Speculative.
You know, and okay, as far as the present day is concerned, I've looked at a couple of hundred stocks in the last week, and everything that's halfway decent is way up. And there's a bunch of the well-known things like Netflix and Amazon and so on, Facebook, so on, that are still going up, but it's a small number of stocks. The majority of stocks, the charts just look awful. I think the market has been going up since election day, up, and it's just out of reason. And my inclination is to do nothing right now.
What?
That's it.
Not sell anything?
I've already sold what I want to sell, and I do own some mutual funds. You can't go in and out with those. But as far as individual stocks are concerned, I own a couple is all right now. I just can't get excited about anything.
Okay, we're always glad to have ladies here. Thanks for coming.
Thank you. Visa is the one
Oh, yeah.
heavily invested in. But it's done nothing but stay up.
Yeah, I mean, that's just been a steady Eddie for sure, for years.
Very good stuff.
So the point about, instead of diversifying, buying thousands of shares, I wish I had done that.
Man, that's what we all think.
Yeah, it's done nothing.
You still got time.
Yeah, it's true.
Despite that.
There is one advantage to something like that you're not really scared out of them. You just let it ride, and it's kind of a steady Eddie gainer.
Yeah,
We always feel that way when the stock does well.
true. But look at, even if you do a 10-year, if you run a 10-year chart on it.
Yeah, but you can't make money on the last 10 years. You can only make money on the next 10 years.
True. But what would be a disruptor here in terms of an alternative?
All of
Bitcoin.
Well, yeah,
But that's
coin
years away.
wallets, Venmo, I mean, I can think of dozens of things. I use Venmo all the time, you know, from
Phone becomes
commercial
a card.
Square. I think it's a lot of potential.
The deal on the coin chain, or the blockchain, it's peer-to-peer. And so that's its competitor.
Right.
Now, the challenge that blockchain has is we have attorneys, we have real estate agents, we have the credit card companies, and that lobbyist is going to fight blockchain. But the simple thing, and we've been trying to get a speaker here from Coinbank to talk to us, is if I have a house, I technically, and I sell it to Noel, I can just do it with Noel and I don't have a real estate broker, I don't have attorneys in it, it's directly moving money to him.
Right.
And that's the thing of this blockchain, not cryptocurrency, whatever, but the blockchain. And governments are using blockchain now, because I work at State Department, so we're using it. Believe it or not, Jamie Dimon, who blasted and destroyed and went crazy over Bitcoin, he has a cryptocurrency that his company uses.
Yeah, he's a vested interest in a competitor, so he's gonna.
And he's using that.
Yeah.
So this blockchain that we keep talking about eventually it will be.
Well, the next 5 years for her are pretty safe because internet buying, Amazon or whatever, is going to grow and grow and grow, which is heavily reliant on Visa. So the next 5 years, it's pretty safe, right? A lot of growth. But after that, these competitors can come in.
But they have good attorneys, Visa, and so does.
And it's
they're
entrenched
going
and
to
easy.
They're going to fight this.
What is the State Department? Who are they doing this crypto exchange?
Well, it's blockchain. They had a program with the Syrian refugees to get them aid. They were able to do it through blockchain, and they had I guess they had sort of a card. I wasn't there, and so they could purchase food and clothing. And so and we had a big seminar about a month ago where we brought in these. Microsoft was there, IBM was there, and all these folks that are involved in this blockchain cryptocurrency. In fact, they came out and said that Bitcoin gave blockchain a bad name because people associate Bitcoin as being a shadow currency used for moving resources with drugs and issues like that. But law enforcement has been able to go in and bust those people because they can see the code and they know it. So in some ways, Homeland Security has used it to take down the narcs and legal trafficking. So there's some issues there, but the concept is peer-to-peer.
Department of Homeland Security, I worked there, they have it.
Homeland Security, there you go.
Is the government using this? Is it still under, I guess, founded on the dollar? Is it independent currency?
No, there's no backed by.
Really independent.
The reason I was so interested in this because we do payments and we do grants, and I see that's where we're going to use it more often. We haven't done it yet, but we have to do exchange rates. So we have U.S. dollars, we have to buy euros, and it takes a process, and it also ties up resources because if there's a fluctuation in the currency, I might have to put a little cushion on the money I'm tying up. This peer-to-peer, if we do it, we get the go from this attorney, we want this done. I just call the accounting people, and it'll be done in overseas in 5 to 6 hours because of the time difference, instead of several days.
Remittances, Venezuela, is quite a bit. If you're trying to send money to a family member in Venezuela because the banking system pretty much collapsed.
What it also, didn't Tom tell us, is it Belize? There was one country he mentioned that the economy took a recession in because the wealthy...
I think Bolivia.
The wealthier folks in Bolivia were using this blockchain to move resources out of there. So
Are we going to get to a point where there's a tipping point where if it gets so mainstream and successful, governments will step in?
I
and
think they're
regulate,
going to have to some point.
which will undermine a lot
At
of
some-
its appeal.
At some point, but I'm just saying in her case with Visa, we're going back to Visa,
Sure.
the concept. That's how people will be using Visa.
Yeah.
Eventually, peer to peer.
Okay, is that it for you, ma'am?
Yes.
Sam, you're next.
Nothing for the group.
Sam, I like your Under Armour because I'm underwater on Under Armour. And I want to know, Sam is wearing, everybody go buy Under Armour garments like that.
Sit in your Tesla, right? Sam?
What do you
Sit in your Tesla.
What do you think you'll get in your car?
Well, I got an email saying it was a pushback
Delay, right?
Yeah.
for about 3 months.
So when do you schedule?
But I don't really, 3 months from whenever the date was gonna be, which I was never notified of either.
Oh, you have that date?
So you just have to get the
So I
database.
don't know what that means.
So they're working with
My original
Comcast.
email
Just
said.
think of that as like,
Comcast
fun
customer
for,
service.
Elon Musk.
It's okay, they're investing
3
on the
months
money
from,
that you deposited.
already unknown date.
It's a tough business.
So is that it for you, Sam?
Yeah, sure.
Well,
That's
speaking of,
dangerous.
speaking of Tesla, I sold all of my Tesla before the fall, so I'm very happy I have this group to thank. I doubled my money over a couple of years, and so I'm happy.
That's good. That's good.
Yeah,
Congratulations.
and if this group hadn't prompted me, I would have just written it out, because I had the expectation, oh, this is going to be a long-term play, I'll just hold on to it. But I think this is going to drop to 200 something. I may rebuy it, but it's going to have a hard 2 years.
It's hard 2 years, you think?
I think 2 years before they get their feet, the energy. And one of the biggest discouraging things was I was counting on the halo effect and the magical impact of Elon Musk, kind of a Steve Jobs thing. I'm starting to discount Elon. He's so distracted by his other interests, space and SpaceX and boring. And I just think that he is ADHD. He can't focus like a Steve Jobs. He's going to move on and on and on. And I don't think he's going to have that halo effect that Apple had. So I'm kind of
So
losing some
you think
faith.
it'll take 2 years to get the Model 3 ramp up?
Get through the Model 3, get through the batteries, get back on a track that it is. I just have a gut feeling it's going to be at least 2 years. Yeah.
For the share price?
For the share price. I think the company will survive, but it's going to be a rough 2 years. Because they need to partner with either an Uber or a fleet company to get this out there to be the next wave of kind of utility cars out there, on the streets, in the self-driving space. I think there's a solid potential for them, but I don't think it's going to be clear for another 2 years. That's my 2 cents.
Okay, is that it for you, James?
Good question. I'm sitting on a lot of cash. I wanted to get into STM or NVIDIA, but they're too expensive. And so I'm waiting for them to dip. Or I probably should consider, to Noel's point about diversifying out of tech a little bit, maybe into a REIT or something outside of tech. That's the thought.
Okay, so that's it for you?
That's it, yep.
There's a gentleman over there.
I'm trying to understand all these things. I've got a question for Noel, I think your name. The stocks he was talking about are so high, like 192. Do you ever sell it, get the money out, or you just
I wasn't always a guy that bought expensive stocks. I used to buy very cheap stocks. So I mean, I usually put money in from other capital gains and roll it over so that I don't get taxed. That's why I repurchase stocks. So if you have a lot of cash, you have like a finite window before your tax guy knocks on your door.
So, I'm not already bright. So what I'm saying is some of the stocks he had were like 192. They have gone up, right?
Well, the amount of
I
capital
think the
gains.
question is, where do you take your profits? 10%, 20%, 50%?
He's asking when would you sell it?
Well,
What's your sell point?
or is that the point of buying a stock to make money or something like?
Goldie's actually more qualified. He's a fund manager.
He's asking you.
Yeah, no. I was just trying. That's okay. That's not quite all right.
You're aware of the 1 year capital gains tax, short-term versus long-term taxing. You don't want to buy something, if you can, write it a year so that it's taxed different. You're aware of that?
No.
Somebody knows this better than I do, but it's a year.
I always thought that you buy stock low and you take a profit, and that's the simple thing I understand.
It's buy low, sell high.
Yeah.
Look at our
Those are
development.
high,
Yep.
but
They go
I didn't
higher.
yeah, it'll go higher, but you just let it ride, right?
Well, I actually came to this club initially with one of my problems was I could pick stocks pretty well. I saw players that were strong. I just didn't know when to sell them. And so for me selling this Tesla stock was a big deal because that was a clear winner. But we've talked about it here before that you set a goal of 10% or 15%. If you're trying to get in and out of stocks, you set a goal and you sell at that increase.
Because it tax purpose.
Well, no, this is just to systematically get out of it, to realize the gain, get out, and then get into something else that's going to grow. It's hard because you're missing out on maybe something that's going up and up and up, something you really love. But if you're, I don't know, the strategy for selling is a big part of this. You have to come up with your own strategy, whether that's a percentage.
Only strategy I understand is to make money.
Yeah.
When you were up.
Yeah, I
So
also
you made a profit, right?
I did. There were also warnings that it was going to go down, so I got out in time.
Right, so you made profit.
Yes, but you need to know when to get out. That's a big question for everyone.
No, he's a good one. It was already high, so I was wondering what he's gonna do, sell it?
This conversation reminds me of that old joke from Will Rogers,
That was a good question.
who said, you only buy stocks that are going up. If they don't go up, don't buy them.
So is that it for you, sir?
Yes, sir. Yes, sir. Thank you.
Where's the next gentleman there?
Hi, my name is Lauren. It's my first meeting with you guys. I wish I had some stock recommendations. I don't.
Yeah. We'll just hear what you think. That's all we're gonna do.
So the reason why I'm here, I'm trying to, obviously invest in equities. I was in college a few years ago. I did some reading on fundamental analysis, technical analysis. So now that I'm out of college, have a little bit of money saved up, I would like to, take investing in equities more seriously. You'll see me. I'm not sure how often you guys meet. Is this every Saturday? Okay. I'm here to just pick your brains, learn from the experts,
I mean, that's it. We want to know what you think, and that's all. Nobody knows the truth. Count on that one. Nobody knows the totality. It's just everybody's got
The
their own
easiest way
opinion.
you can contribute if you don't have stock will be just what trends you've noticed. You've been noticing. Like could be some millennials are buying more. I don't know, some toys, and which companies behind that, or it's a trend that can be sustainable for next few years, maybe even. Right. So that then somebody will be, I know a company that does exactly that. And then you take advantage of that.
So is that it for you?
Any recommendations on text or blogs or I don't know.
We have. Are you talking about staying connected with the group? Text?
Like books,
random walk.
where should someone like me start?
A lot of us like Seeking Alpha.
Seeking Alpha?
That's a website.
There's a website.
It's a great app.
I've heard of that.
I mean, that's sort of about Yahoo on steroids, if you will.
Okay.
They're, they have a little bit higher cut than Yahoo.
But yeah, keep asking about books because everyone here has a book recommendation. So instead of random
We'll
books.
talk about it after.
Okay.
So what's your name again?
Huh?
What's your name?
Falarn?
Yeah, I will.
Okay.
Falarn?
Yeah, Florida. So this is John over here loves this website. Want to get investors' business in. Investors.com is a way to get a good read on
Don't
the
read the
general
editorials, just read the.
They're very conservative, actually.
Well, on this fella who created, his name is William O'Neill.
Yeah.
And I think if you want, he's more like a Vince. Vince is more goes up, momentum, straight up, and that's what his take is. But you can get a CD,
Investors.com.
and he'll explain his strategy. But the one thing I like about Investors Business Daily is I get it maybe once a month or every other month. Is the version that comes out today. Because what they do is they have the whole market in sectors. And so one strategy you could use is, let's say it's a very good company, but the sector out of 20 or 30 sectors they have, the sector's ranked 26, but it's a good company, and that could be drawing down the stock because it's out of favor. I bet you like consumer goods, I think, is out of favor right now. And but that's one analysis. But I would say start, if you educational wise, just try to read Barron's just to get an idea what people are talking about.
Wall Street Journal.
And Wall Street Journal too.
By the way, he mentioned William O'Neill. That book that he wrote, you can still buy it. And I forget the exact title, but look up William O'Neill.
Yeah, it's
Probably at the library.
And
Is it at the library? Can you check it out?
yeah.
I
Probably.
went to an old book sale at a library yesterday, and there was the book.
How funny.
Yeah.
But you can listen, I think it's free. They'll give you a trial, and you could at least listen to the CD, and they'll go over their strategies. But that's more of a momentum kind of idea that William O'Neill's has.
How to make money in stocks. It's in his 4th or 5th edition. I'm sure. 4th edition here. Ebook for only $13.
Okay, by the way, is anybody out? And we're over at 1 o'clock.
No,
so-
nobody's there.
Oh, okay. So is that it for you?
Yep.
All right, Wayne, I guess you're next.
Okay, so I held through Ovaltech, the earnings, and I also actually closed out my Adobe position. Which I had like over 100-something%
Which
return
was?
on it.
Which?
You closed
Adobe.
Oh, Adobe, yeah.
Yeah.
Why don't you close it out?
Because I'm trying to scale down my portfolio. I'm basically doing the same thing, trying to reduce the percentage of my position into cash. Because I do see right now with the tax, of course, a lot of people here don't care about the macro events. If it's a good company, hold on to it, right? But my philosophy is that I do care about short-term events just because it does affect the long-term view at some point. So right now, of course, this week we got like the tax bill that's going through, right? A big chunk of it is going to be cutting through the tax brackets to like 15%, and then 25, and then like 30 something, I don't remember. And then also certain aspect of it is going to be trying to reduce a lot of the deductions that people is trying to claim, especially for real estate market. Like if you look at companies like some builders ETF, do you guys look at what happened to the builders? That's a ITB, right? So a part of the bill essentially is talking about cutting down the total amount of mortgage deduction you're allowed to do for the loan from $1 million to $500,000, and that on top of also getting rid of estate tax and a bunch of other deductions that essentially actually cause a lot of the builders on top of the realtors to get in this like panic states. Essentially, they're talking about higher end markets have a harder time sell.
If you cut back on 401ks and IRAs, logically some people are going to invest less.
They're not going to touch 401k.
It's on the table. It's just
yeah, they could, but at the end
the
of
estate tax will make no difference.
Yeah, but I don't think the Senate is going to try to touch the 401k either.
I think
The talking heads said that their proposal is not.
It's not
going anywhere.
And the Senate is not going to modify that either. So I do see that the people who's going to fight this, they're going to be the home builders, like all the REITs that we're talking about trying to get into. They might take a hit, and then of course all the builders, right? They're taking a hit. They're going to fight it. So National Association of Home Builders, National Association of Realtors, they're of course. They have a lot of money. Most of the people make a lot of money from the real estate.
But if the bill doesn't get through, they won't be hurt. If the bill fails and doesn't get through, they won't be hurt.
Yeah. So how much of this market is actually riding on this bill? So I don't know.
Well, I think a lot of the financials are. The financials are up 20-30%, something like that, in the last year, maybe more. And they're going to be seriously hurt if this bill goes down to defeat and they pass nothing.
Back to your theme of Adobe, though. So you're getting cash in anticipation of a market pullback?
Yeah.
That's it? But no fundamental issue with Adobe?
Right now, there really isn't, because I do see, just because I make a lot of videos on YouTube. I make a lot of videos on YouTube, and I see a lot of people are still using the product, and I see a big trend of people moving more and more into making this video production, trying to make money off streaming services like YouTube or through whatever service they're trying to do. So underlying companies is fine, but I just make a lot of money. I want to take something out. So that was the rationale behind it. At least. I might regret it down the road, but I'd rather have the cash right now and wait for opportunities.
Nobody got hurt taking a profit, I heard. Nobody.
Right. So at least it leaves me with ammunition when there is an opportunity versus when something does happen, I have no ammunition to take advantage of it. So that's
what we want to know. We want to know what you think. I mean, who knows what the truth will be, but we want to know what you think.
Yep. So so I'm still holding on to Opotech though, because I see that has a lot more significant, I guess, runway for growth, right? So I mean, Adobe's it's gone up like a few 100% times the past few years. So yeah, I mean, this one market cap is only two billions, and then they have very good revenue growth, and also their flat panel display market. Once that gets kicked into the Chinese market. That's of course going to be a significant boost, and we're looking at like 250,000 million revenue for the next quarter, which is above the estimate for the Wall Street. So yeah, short term, this one is like freaking shiny star right now, and I'm up like 200% on there right now because I do options in it. So I have like I started off with like 30 something call options in it at the strike of 35, and now I'm down to 25 total call options in it. So I'm basically playing with the house's money at this point. Yeah, so that would be it for me.
All right, lady here. Glad to see another lady.
Well, I'm taking all the advice that y'all gave me, and I'm building up my cash to start investing. So I have a financial plan.
Okay. All right, I guess Hector, you're going to wrap it up here.
Real quick, EX, what do you think about this? It's taken, I know that the hurricane season that we had, terrible on travel, and EXP got hit. I wonder if you guys think it's a good buying opportunity because they're taking a seasonal hit on income here. But that's quite a drop.
Well, that looks like more of an event of some kind.
Yeah.
It's so steep. What happened?
Yeah, because they claim travel to Puerto Rico, the Virgin Islands, they kind of got profits, and Sea Trip is another one in that space.
Oh, that is a tumble.
Can you overlay Priceline with that just to see what?
Yeah, good idea.
PCLN. I know they're down, but I want to see how much they map.
Yeah. And but they didn't take that drop.
Yeah, that's curious. There might be something more than to Expedia.
Right.
Well, their businesses are not really the same. They're in the same business, but their businesses are not the same. Priceline makes most of its money in Europe.
How about
hotels?
What do you have, Sam?
Sam?
What? I know. What do you have, Sam? For Priceline and the other guy?
Oh yeah, I have Priceline and TripAdvisor.
TripAdvisor's been suffering.
I just want to see what TripAdvisor.
It's
TRIP.
It's been tripping.
I'm sorry.
I thought they were taking.
Are you in it?
No, I advised a friend to buy, and I'm kicking myself.
Yeah.
Okay. So.
Yeah.
Do a longer term.
Yeah, I guess we're
right. Okay, we can have.
I think we're ready to pull out here, but I think you can stay if you want to stay. I mean, if this is in here, you want here or whatever.
And this concludes this week's live stream. Thank you for listening.